Okay, guys, see, three conditions to claim depreciation. Okay, number one, asset should be a. Number two, assessee should be the. And number three, first condition, asset should be a specified asset. What is the meaning of specified asset? Meaning the assets which they are telling you, on those assets only you can claim what? Depreciation. Okay. Now tell me, in any business or profession, the assets which are used, what did I say? Assets used in any business or profession. What type of assets can be used? Two types. Number one, tangible assets. Number two, you know na, tangible, intangible. Hello? What is tangible? Seeable, touchable. Hello? Feelable. Intangibles only feelable. You cannot see. You cannot touch. Intangible assets. Yes or no? Few examples. Copyright, trademark, patents, brand names, franchises. Yes or no? So all the intangible assets, what did I say? Which are used for the purpose of business or profession are eligible. Are eligible. Other than goodwill. Other than goodwill. You cannot claim any depreciation on goodwill. Cost of goodwill will not be allowed as a deduction under the head PGBP in the form of depreciation. Throw the goodwill out of PGBP head. Throw the goodwill out of PGBP head. This was the amendment which came in 2020. So with effect from 1st April 2020, with effect from 1st April 2020, any goodwill acquired for the purpose of business or profession, the cost of that goodwill will not be allowed as a deduction under the head PGBP in the form of depreciation. Goodwill will be thrown out. Even those goodwills which were purchased prior to 1st April 2020 are also thrown out. Whatever remaining cost after claiming depreciation and all, WDV, yes or no, will also be thrown out. Meaning, any goodwill which was acquired, goodwill which was acquired, now the goodwill will be acquired prior to 1st April 2020, or it could have been acquired on or after 1st April 2020. So the goodwill which is acquired on or after 1st April 2020, actual cost of that goodwill cannot be claimed under the head PGBP. Actual cost of that goodwill under the head PGBP cannot be claimed. So this actual cost will directly go to which head? Capital gain. Throw this goodwill to capital gain head. Hello? And the actual cost of that goodwill which cannot be allowed under PGBP head, throw that cost also in capital gain. We will see this goodwill in capital gain, not here. Understanding? Prior to this, what did I say? Prior to this, goodwill was an eligible asset. And you used to get the depreciation also on goodwill. So don't you think, prior to this, if the goodwill was acquired, you might have incurred the actual cost on that goodwill? Hello? Out of that actual cost, some actual cost was already allowed in the form of depreciation up to 31st March 2020. Now whatever balance cost which remains is nothing but WDV. As on 31st March 2000, this WDV will also not be allowed anymore under the head PGBP. This will also not be allowed under the head PGBP. So bring this also under the head capital gain. Under the head capital gain. Will you remember this? So for example, you acquired one goodwill in 2018-19. Which year? Which year? So in the year 18-19, the cost of that goodwill, example, the cost of that goodwill was 10 lakhs. How much? Out of that 10 lakh, some cost you have claimed in the year 18-19 as a depreciation. Some cost you would have claimed in the year 19-20 in the form of depreciation. And the balance cost as on 31st March 2020, which is nothing but the WDV, yes or no? WDV is what? Remaining cost. After eliminating depreciation, remaining cost. That amount will also no more be allowed. So with effect from 1st April 2020, even the remaining cost of this goodwill will also not be allowed. Even if it was allowed earlier. So any goodwill which was purchased prior to 20, its remaining cost, meaning WDV as on 31st March 2020, will also not be allowed under the head PGBP. And any goodwill which you acquire on or after 1st April 2020, its entire cost will also not be allowed as a deduction under the head PGBP. You cannot claim it under PGBP. Throw these goodwill to capital gain. We will check this in capital gain. Understanding? We are not saying that we are not going to allow this goodwill, cost of this goodwill. We are going to allow, but we are going to allow this at the time when you transfer this goodwill as a capital asset. Yes or no? At that time, under the head capital gain, when you will transfer this goodwill, to calculate the capital gain of this goodwill, we will allow this cost under the head capital gain and not under the head PGBP. Will you remember this? Any other intangible asset? Any other intangible asset used for the purpose of business or profession will be allowed under the head PGBP. So all intangibles allowed under PGBP except goodwill. Except, understanding? Next one, tangible assets. Which assets? Now how many types of tangible assets you can have? Two types. Tell me. 4 types. How many types? All the tangible assets will be divided into 4 categories. Can I say land is a tangible asset? Hello? Building is also a tangible asset. Furniture and fixtures is also a tangible asset. And anything which is not a land, building or furniture will always be treated as plant and machinery. So under the Income Tax Act, every tangible asset which is not a land, which is not a building, which is not a furniture will be treated as this computer is under the Income Tax Act. This computer is plant and machinery. Air conditioner, this camera, motor car, hello, the machinery used in the factory, plant and machinery. Everything is a plant and machinery. Yes or no? Now, these 4 types of tangible assets can be there. Now, in your business, can you use land? Yes or no? In your business or profession, can you use building? Can you use furniture and fixture? Can you use any other asset? And that is known as plant and machinery. Now see, can you incur actual cost on the land? Can you incur actual cost on the land? The land which you have acquired for the purpose of business or profession, actual cost of that land. Actual cost of that land cannot be claimed under the head PGBP. Bring this actual cost also under the head capital gain. Why? First of all, the cost will be a small amount or a big amount. This we cannot allow fully from your business income, because if we will allow this fully, what will happen? This will result into computation of loss. This will result into computation of loss, and so it cannot be allowed fully. And moreover, if we are going to allow in small part in the form of depreciation, people will laugh on us, because land is not a depreciable asset. So we cannot allow the cost of land fully under the head PGBP, and neither this can be allowed in the form of depreciation, because land is not a depreciable asset, by the way. Hello. So entire cost of the land, forget in the PGBP head, will be claimed under capital gain. Whenever you will transfer this land, at the time of transfer, you will calculate capital gain. At the time of calculating the capital gain, this cost will be allowed under the head capital gain and not under the head PGBP. Will you remember this? Building is actual cost of building, actual cost of furniture and fixture, and actual cost of plant and machinery. Yes or no? Yes or no? Yes or no? Can be claimed under the head PGBP. Yes or no, sir? So, which assets are now specified? Come on, tell me. Under the PGBP head, these assets are used for the purpose of business or profession. Their cost only can be claimed in the form of depreciation. Number 1, building. Number 2, furniture. Number 3, plant and machinery. Number 4, all intangible assets other than goodwill. Understanding? Now what is plant and machinery? I told you. What is plant and machinery? Anything which is not a land, not a building, not a furniture and fixture will be known as. But the term plant and machinery is also defined. There is a definition of plant and machinery. So as per the definition of plant and machinery, the term plant and machinery includes. Plant and machinery includes. Few items will be treated as plant and machinery. And the term plant and machinery excludes. Few items will not be treated as plant. Definition of plant is given. Definition of plant. So the term plant includes this. If you see any of these items, this is plant. Claim the cost of these items in the form of depreciation under the head PGBP, because these are treated as plant. But these items are not treated as plant. These items are not treated as plant. Exclude these items from the definition of plant. The cost of these items you cannot claim under the head PGBP in the form of depreciation. Why? Because these are not treated as plant only. A plant is not treated as plant. Tea bushes. Tea bushes. You know not tea bushes? What is tea bushes? A tea we drink is made up of leaves. And the small, plant. Small tea plant is known as what? Tea bushes. That is not a plant. English is a very funny language. Huh? Plant is plant also, and plant is plant also. What is the meaning of plant? Plant means plant and machinery also, and plant means that green color. Yes or no? That also is a plant. Very limited words are there in English. See, the person who is elder to you, you call him you. And the person who is younger to you, you call him you only. So no respect only. So, English. What did I say? English. English means plant and machinery. I am talking about plant. With regard to plant and machinery, includes these items and it excludes these items. So you have to remember this and this. You have to remember this and this. Getting my point? So let's go. Let's check. First of all, the term plant includes what? Ships, books, vehicles, scientific apparatus and surgical equipments. If you see any of these items, what will you call them? So for your business or profession, if you are acquiring these items, they will be treated as your plant and machinery. They will be treated as your. So can you acquire ships for your business or profession? How come in business or professions or ship? My business is shipping business. So in my shipping business, what I will buy? Ships for transportation of goods, passengers, etc. Yes or no? So if I am into shipping business, what I will buy? Ships. For my shipping business, my ship is what? Plant and machinery. Can I buy books, etc. in business or profession? For a lawyer, for a chartered accountant, for doctors, professionals, yes or no? They have books also which they use in their business or profession to give their services to their clients. As a chartered accountant, when you'll open an office, in your office, will you buy books? Those books are not your revenue expenditure. Those books are capital expenditure, treated as plant and machinery. If you are in the business of running the libraries, you are in the business of running the libraries. In the libraries, whatever books you are going to buy, those books are going to be used in the business for many number of years. So the books will not be a revenue expenditure. It will be a capital expenditure. And that will be treated as your plant and machinery. Plant. Yes or no? Vehicles can you use in your business? How come? For the transportation of my employees, buses are there. For the transportation of my goods, trucks are there. For my directors of the company, for the employees of my company, to give them motor car facility, motor cars are there. Yes or no? Which is a perquisite in their hands. But for the company, those are the vehicles which are used in the business. Understanding or not? So, ship is a plant or not a plant? Books is a plant or not a plant? Vehicles is also a plant. Then, scientific apparatus. Scientific apparatus means what? Yesterday I gave you an example of Bharat Biotech, if you remember. What is the business of Bharat Biotech? Conducting scientific research and development. So in the research and development, different scientific research is going on. So are there any apparatus which will be used in their research business? Scientific apparatus means those test tubes, microscopes, yes or no? All the scientific items which are used in the business. Yes or no? Known as what? Scientific apparatus. They are also plant. Surgical equipments. Surgical strike happened, no? That, no? What is surgical equipment? Who will use this? First of all, tell me. Doctors will use it in their profession to perform surgeries. So those equipments which are used by the doctors, in their hospitals, nursing home, clinics to perform surgeries are known as what? Surgical equipments. They are also known as plant and machinery. Yes or no? So the term plant includes ships, books, vehicles, scientific apparatus and surgical equipment. Specifically, they are included in the definition of plant and machinery. Yes or no? Now, certain items will not be treated as plant and machinery. If you have any building that is not a plant, wow, thank you. You told us. Otherwise, we were supposed to take it as a plant only. Building is not a plant. Furniture and fixtures, not a plant. Thank you so much. Then what is not a plant? Tea bushes, not a plant. Animals, not a plant. Because in your business you can use all these things. Don't try to consider these things as plant and machinery because they are not covered in the definition of plant, specifically excluded. So first of all, anything which is not land, not a building, not a furniture and fixture is plant and machinery. But few things will not be treated as plant. Number one, tea bushes will not be treated as plant. Number two, animals will not be treated as plant. Stocking trade will not be treated as plant. Yes or no? And human body and its parts is also not treated as plant. Because all these items can be used in the business, but they cannot be treated as plant. Why? Reason being, tea bushes, the cost of tea bushes. In your tea business, for example, you are a manufacturer of tea, and in your manufacturing business you want tea leaves, and those tea leaves you are only growing. So how will you grow the tea leaves? You will buy tea bushes, you will plant the tea bushes in your tea gardens, yes or no? And that tea bushes will give you tea leaves, which you are going to convert into tea, which you are going to process into tea, and you are going to sell those tea. Yes or no? So in your tea business, you want tea leaves, and to get those tea leaves, you are yourself you are growing the tea. Yes or no? To grow those tea leaves, you want tea bushes. So will you buy the tea bushes? Small plants, tea plants. Will you buy the small tea plants to plant them? Any expenditure incurred on those plants, no, is revenue in nature. Is already allowed as a deduction. And now you want to consider them as plant and machinery, and you want to claim their cost as depreciation. We are not going to allow it as depreciation. We are going to allow as revenue expenditure. Claim it as revenue expenditure only. Yes or no? Hence, tea bushes are not plant. Number one, animals can be used in the business. Can you use animals in your business? Give me some example. Sheep. How come? To get the wool, I can have sheep. Okay, what I will do with that wool? I will manufacture sweaters. So to manufacture sweaters, I want wool, and to get that wool, I am having sheep in my business. Okay, very good. Then any other? Cow. Oh wow. How come cow? I am in the dairy business. So in my dairy business, the cows are there, buffaloes are there. Yes or no? I am in the poultry farming. So in my business, chicken will be there, which will be giving me eggs. Yes or no? So these are all the animals which are used in the business. By the way, any living thing can never be treated as an asset. You don't capitalize those items in your balance sheet as what? Asset. Do you capitalize these items in your balance sheet as an asset? No. So usually these items are what? Living things, and living things will not consider as asset. Okay, but wait. If we will not consider them asset, we will not consider them as plant. But if they are used in my business, if they are used in my business. So their cost should also be allowed under the PGBP head. But it will not be allowed in the form of depreciation. There is a separate section which will allow you the cost of livestock, etc., which will allow you the cost of animals which are used in your business, that we are going to see later on. But their cost we allow separately under separate section. So don't try to claim their cost under the head PGBP in the form of depreciation, as they are not treated as plant only. Anything which is not a land, not a building, not a furniture will be plant and machinery. But the term plant does not include animals. Their cost you cannot claim in the form of depreciation. How can you bloody depreciate a living item? Can you depreciate a living item? Can you depreciate human body and its parts? No. So even human body and its parts are not treated as what? Plant. Even though human body and its parts are used in the business or profession. How come, sir? I am in a profession. What is my profession? Tell me. I am into teaching profession. Am I using my heart and mind? Am I using my heart and my mind in this profession? So human body and its part used in the profession? Yes or no? But it will not be treated as plant. It will not be treated as. How can a living thing, hello? How can a living item, living human being can be treated as plant and machinery? Is it logical? Will you depreciate? What cost you have incurred for this? Understanding? There was a case earlier. I'll tell you that case. Delhi High Court case. There was a very famous lawyer. The name of that lawyer was Shanti Bhushan. I don't know whether you have heard his name or not. The name of that lawyer was Shanti Bhushan. He was a Supreme Court lawyer, very reputed person. And if you will Google his name now, you will see his photo and all. You will see this famous case also associated with him, which I am going to just now explain. This Shanti Bhushan was a lawyer. Lawyer means which profession? Legal profession. He was in the legal profession. So he was practicing as a lawyer. He was a practicing lawyer in the Supreme Court, High Court. He used to fight the case for his clients. Now he was very old. And one fine day, when he was arguing in the court, all of a sudden he got an heart attack while arguing in the courtroom itself. So in the courtroom itself, while arguing for a case, he got a heart attack. Since he was very old, no? So his heart was not working properly. There were few blockages in the heart, and as a result of that, he got a heart attack. So fortunately, he got the heart attack in the courtroom. Everyone rushed him to the hospital. Now he went to the hospital on time. He reached hospital, but the doctor, to save his life, the doctors had to perform open heart surgery. Open heart surgery is dangerous, huh? Okay. So open heart surgery was done, and fortunately he could be saved. His life could be saved. Now, in that open heart surgery which happened, some amount was spent to do that surgery on the heart. Amount was approximately 20-30 lakhs. How much? So 20-30 lakhs was the cost of that open heart surgery. Now after recovering, after few months, he recovered, and return filing time came. So in his return, he was showing the income of his profession under the head PGBP. So his profession was legal profession. So from this profession, whatever he was earning, He was showing that as his income under the head PGBP. Out of that income, he claimed this amount as a deduction. Which amount? Cost of performing heart surgery as a deduction under section 31. Repairs to plant and machinery. He claimed this amount. Literally, this is not something which is a made up story. This is an actual case which happened, which I am sharing with you. So he claimed this heart surgery, cost of this heart surgery as what? Repairs cost. What repairing? Under section 31, repairs to plant and machinery is allowed as a deduction. So immediately his assessing officer saw that bloody this time Mr. Shanti Bhushan has shown the income of this much under the PGBP head, and he is into a profession, legal profession. How a lawyer can incur such a huge expenditure as repairs expenditure on a plant and machinery? Bloody what type of plant and machinery he is using in his legal profession? Even that assessing officer got surprised. So he immediately sent a notice to Mr. Shanti Bhushan. Mr. Bhushan, please come with all the details. This details are required. We want to meet you and we want to have a word with you regarding this expenditure which you have claimed out of your income. Shanti Bhushan went. Assessing officer asked, sir, you are in the legal profession, no? Yes. Meaning you are a lawyer? Yes. So from this legal profession you are earning income. Wow, wonderful. In this legal profession, what type of plant and machinery you are using that the repair cost of that plant and machinery is such a huge amount? According to us, in a legal profession, normally plant and machinery is not used. You are only the person who is going to give the services to your client. Yes or no? So what Shanti Bhushan said, I myself am a plant and machinery. My heart, my brain, everything will be used in my profession to give my services to the client and earn this legal income. So the income which I am earning, to earn this income, my entire body is used in my profession, including my heart, my brain, everything. Yes or no? So according to me, anything which is used in the business or profession over the number of years which allows you to take the benefit out of that business, that is nothing but asset. That is nothing but asset. So my entire body is my asset, which is used in my profession to earn my professional income. And my body includes my heart, my brain, everything. So to exercise this profession, heart and mind are plant and machinery, and this plant and machinery was not working properly. To get it into working condition, this expenditure was incurred. Hence, I am considering this as repairs to my plant and machinery, and I am claiming it as a deduction. That assessing officer fell down, Seriously. And this is the beauty of being an advocate, no? Lawyer. He can twist the language of law in any way which he wants. Now this assessing officer was very adamant and he was not ready to allow this expenditure under section 31 as repair cost. Why? He felt that because of incurring this expenditure, your life increased. And any expenditure which increases the capacity or the life of the asset is a capital expenditure. Repairs of capital nature should not be allowed under section 31, but should be allowed as depreciation in small parts. Assessing officer was his father only. Just kidding. In terms of, this thing. See, the fight is not that whether this heart will be treated as plant and machinery or not. No, the fight was Mr. Shanti Bhushan wanted to claim this entire cost as at once under section 31 as current repairs. Because to keep my plant and machinery in working condition, this expenditure was incurred. And assessing officer was not ready to allow this at once. He was of the opinion that because of incurring this expenditure, since your life increased, this should be allowed as depreciation and not under section 31. Nobody even bothered that the expenditure is incurred on the heart. And how the bloody hell the heart can be treated as plant and machinery. Understanding? So both of them were fighting. One was saying fully allowed under section 31. Another was saying fully will not allow because this is capital repairs, will be allowed in small parts in the form of depreciation. Now this case went to Delhi High Court. Which High Court? And Delhi High Court gave the judgment that it can neither be allowed under section 31 nor it can be claimed under section 32 because this expenditure is incurred on an item, heart, which is not treated as an asset. What is an asset? Asset is something which you acquire. Have you acquired the heart? Or you were born with it? So you did not acquire that heart. And moreover, whenever any asset is acquired, the cost on that asset is incurred and that asset is also capitalized in your books, in your balance sheet as your asset. Have you shown this item as your asset in your balance sheet? Show us your balance sheet. In your balance sheet, have you shown your heart as an asset? No, na? Bloody, the item which is not an asset only. So the question of allowing the cost on that item as repair cost under section 31 or as depreciation does not arise only because the item itself is not an asset. Understanding? And that time both of them were reprimanded by the High Court that you are wasting time, precious time of the High Court in such kind of bullshit arguments. Shanti Bhushan, whatever life is remaining with you, spend that life peacefully. Don't get involved into all such things. And you are a very reputed lawyer. A lawyer of your caliber should not be involved in such kind of silly cases. The court reprimanded Shanti Bhushan and also that assessing officer. Have you lost your mind, assessing officer? You should apply some logic, you should apply some mind before even fighting with the assessee for such silly reasons. So, conclusion, Delhi High Court denied that the cost will not be allowed under section 31 also, it will not be allowed under 32 also. Why? Because this cost of open heart surgery is not treated as expenditure incurred on asset. Because the item on which it is incurred is nothing but heart, and heart cannot be treated, heart or any part of the body, even if it is used in the profession or business, cannot be treated as asset. After that, an amendment came and they had to exclude human body and its parts as what? As plant. So hence, human body and its parts are not treated as asset. Even if they are used in the business or profession of the assessee, they cannot be treated as what? Asset. Now, I am in the teaching profession. So, I am using my mind, brain, I am using my heart, I am using my entire body. For example, I am not teaching on this iPad. I'm teaching you on the board. I'm teaching you on the, so to teach you on the board, I have to stand up on my feet. And teaching for so many long hours, standing and teaching for so many long hours, because of that, my knees, I had to do knees were paining, so I had to do a knee replacement operation. And that knee replacement operation I will claim as a deduction under PGBP income. So whatever income I am earning from my teaching profession, from that income, I will reduce the amount of knee replacement expenditure as what? Deduction. As what? Repairs to plant and machinery. If this thing is not there, if this human body and its parts is not excluded, every professional will start doing it. Even a person like me who is getting the knee replacement done, what he will say? This knee replacement is done of my feet. And I'm standing on my feet to teach my students. Okay. So feet is a asset used in my business. What type of asset? Land, building, furniture, fixture? No. If it is not, it is plant and machinery. And the cost of this I will claim either under section 31 or under section 32, which the government does not want to allow. Hence, human body and its parts are not treated as plant. Understanding? Stock in trade will also not be treated as plant. Why? Any asset which is not land, building or furniture will be plant and machinery, no? So stock in trade will not be a plant. Why? Because the cost of stock in trade is not a capital expenditure. It is a revenue expenditure. Out of the selling price of stock in trade, we already allow you the cost of stock in trade to calculate the profit and gain. So the cost of this stock in trade, we already allow you as a revenue expenditure under the PGBP head. Then why are you considering this as a plant? Because the cost incurred on this asset is not capital expenditure. It is a revenue expenditure, which we already allow you under the head PGBP to calculate your profit and gain. Understanding? So tell me, number one, tangible assets. Which type of tangible assets? Land, building, furniture, fitting, plant and machinery. Land will not be treated as, land will not be treated as an eligible asset under PGBP head. The land and its cost thrown out and it will go to capital gain. Building, furniture and fittings and plant and machinery. The cost of these items only can be claimed under PGBP head in the form of depreciation. These are the eligible tangible assets. Yes or no? What about intangible assets? They are also eligible. Their cost also can be claimed under the head PGBP. But the intangible asset should not be goodwill. Other than goodwill, any other intangible asset can be there. Now tell me, in the definition, they have defined plant. Plant is defined under section 43(3). The term plant includes, number one, ships, books, vehicles, scientific apparatus, surgical equipments. If you see any of these items, what are you going to call them? They are your plant and machinery in your business. Any cost incurred on these items are capital costs, capital expenditures will be allowed under the head PGBP in the form of depreciation. Yes or no? And what is excluded from the definition of plant? Number one, tea bushes, animals, building, furniture, human body and its parts and stock in trade. These items will not be treated as plant. Will you remember? Hello? Will you remember? Specified asset. First condition, the asset should be a specified asset. Done? Second condition, assessee should be the owner of that asset. So whatever asset which is used for your business or profession, the cost of that asset you want to claim, then you have to incur that cost. And if you have incurred the cost, that means you are the owner. So who will incur the cost? Owner. So owner should be the person who should be getting the deduction for that cost. So if you are not the owner, you have not incurred the cost. And if you have not incurred the cost, how do we allow you that cost? For example, this camera I have bought for 2 lakhs. So have I incurred? Now I will become the owner of this camera. The moment I will buy this camera by incurring 2 lakh rupees, yes or no, will I become the owner of this camera? So I have become the owner of the camera, meaning that I have incurred the cost. And if I have incurred the cost on the asset, that cost should be allowed to me, to the owner only. Getting my point? But if I have not incurred the cost, I am not the owner. And if I am not the owner, meaning that I have not incurred the cost. And if the cost is not incurred by me, that cost cannot be allowed to me. Understanding? So it is very important to be the owner. Why owner? Why ownership is required? Because the owner of the asset will be the person who has incurred the cost. And the person who has incurred the cost is eligible to get the deduction of that cost in the form of depreciation. Understanding? So what type of owner should be there? Legal owner. You should be the legal owner of that asset. But sometimes, even if you are not the legal owner of the asset, still the cost of that asset which you have incurred will be allowed to you as depreciation, provided it is proof that you are a beneficial owner of that asset. Supreme Court judgment in the case of Mysore Minerals Limited. There was a case. Name of the case was Mysore Minerals Limited. In that case, the Supreme Court gave the judgment that even if assessee is not the legal owner of the asset, still the assessee will get the deduction for depreciation on that asset. Why? Because he is the beneficial owner of the asset. So being a legal owner is necessary? Yes. Being the legal owner of the asset is necessary. But sometimes even if you are not the legal owner of the asset, but if it is proved that cost is incurred by you and you are the beneficial owner of the asset, then the cost of that asset can be allowed to you in the form of depreciation, even if you are not the legal owner. Understanding? So, sir, give us one example for that. For example, in my business, I want to use some trucks, vehicles. So I want to use some vehicles in my business. But to buy those vehicles, I did not have money. So what I did, I took a loan. So what is the cost of vehicle? Example, 10 lakh rupees. How much? So per vehicle will cost how much? 10 lakh. But I have only 1 lakh. Remaining 9 lakh I am taking as loan. Possible or not possible? Tell me. So what entry will I pass now? What entry will I pass? Will I capitalize the asset in my books? Yes. I am buying the asset. So this becomes my property. Yes or no? I will also capitalize the asset in my books. Entry will be asset account debit to cash 1 lakh rupees which I am giving right now, and to loan 9 lakh rupees. Asset I will show on the balance sheet side 10 lakh rupees. 1 lakh rupees cash will go, and against that 9 lakh rupees will be appearing as a loan. Don't you think the entire 10 lakh rupees cost I am only bearing? 1 lakh right now I am giving, and the balance 9 lakh which is financed by the bank, I am going to pay that 9 lakh slowly in small parts to the bank. Ultimately that 9 lakh rupees cost will be going from my pocket only, no? So the entire cost of that asset is met by me. Should be allowed as a deduction to me. But it is not allowed as a deduction to me. Why? Because I am not yet the legal owner of this asset. Because whenever this vehicle will be registered in the RTO records, my name will be the registered owner, but there will be a hypothecation. This vehicle is hypothecated to the lender. And till the time I don't pay the lender the entire 9 lakh, till that time I will not get the legal ownership of this asset. Understanding? Legal ownership will come when I'll pay the last installment. Then that lender will issue a NOC, and that NOC I will show to the RTO, and then RTO in my RC book will remove the hypothecation and make me the legal owner. Understanding? Till that time, and that is going to take 5 to 7 years time, because the loan is going to be repaid for next 5 to 7 years. For 5 to 7 years, even if the asset is used in my business, I will not be able to claim the depreciation. Why? Because I'm not a legal owner. Legal owner I am going to become after 5 years. So after 5 years, when I will become legal owner, from that time should I get the depreciation? So the case was this only. So Supreme Court said that if it is clearly visible that the entire cost is incurred by assessee. Hello? Asset is used in his business or profession. Asset is in his possession. The only thing is that he is not the legal owner of that asset, because he has acquired the asset by way of taking a loan, and he will become the legal owner as per the RTO. He will become the legal owner only if he clears the hypothecation by paying the last installment. That does not mean that he should not be given the depreciation on this asset. Consider him as a beneficial owner and give the depreciation to assessee only, because he is only incurring the cost of that asset. So it is necessary to be the legal owner of the asset. But in certain cases, if you are not the legal owner of the asset, but if it is proved that you are the beneficial owner of the asset and you have incurred the cost of that asset, that cost will be allowed in your hands only in the form of depreciation, because you are the beneficial owner of that asset, as per the judgment of Mysore Minerals Limited. Will you remember? Hello? Hello, sir? Sir, are you an assessee? Any person? Have you acquired any specified asset which is used for your business or? So you must be the owner of that asset. What type of owner? Legal owner. Only then the cost of this asset will be claimed by you in the form of depreciation. But sometimes, if you are not the legal owner, but if it is proved that you are the beneficial owner of the asset and the cost of that asset is borne by you, incurred by you, then that cost will be allowed to you only in the form of depreciation, considering you only as the owner, because you are the beneficial owner of the asset. Will you remember this? Will you remember this? Now see, in this case, lessor and lessee. You know who is a lessor? The person who is the owner of the asset but gives the asset on lease to someone is known as lessor. So for example, I am having one asset. Okay, this is my asset. I am the owner of this asset. Cost of this asset is 5 lakhs. How much is the cost? Who has incurred this cost? I have incurred the cost, no? From my pocket, I paid 5 lakhs and I bought this asset for 5 lakhs. Okay. Now this asset, I am the owner of this asset. 5 lakh cost of this asset I have incurred. Now this asset I am giving on lease. I am giving on to you. So you are a lessor, no? Or you are a lessee. So you are a lessee. The person who is giving on lease, meaning myself, I am a sure. Now the asset which I have given on lease to you, you are using that asset in your business or profession. Possible, not possible? You said, sir, give me this asset. I want to use that asset for my business. So I said, okay, take this asset from me on lease and use this asset in your business or profession. So are you using this asset in your business or profession, lessee? Hello, Mr. Lessee. Are you using this asset in your business or profession? Cost of this asset will be allowed as a depreciation in your hands because you are using that asset for your business or profession. No. Even if you are using the asset for your business or profession, the cost of this asset cannot be allowed to you. Why? Because you are not the owner of the asset, neither the legal owner nor the beneficial owner. So if you are not the owner of the asset, so even if you are using that asset for your business or profession, you cannot claim the cost of this asset as depreciation because you have not incurred that cost. Who will claim? Always the lessor. But now I will claim this cost as a depreciation under the head IFOS. Why? Because the lease rent which you are giving me, because the lease rent which you are giving me is my income. The asset given on lease. So the income of this asset, meaning lease rent, is charged by me under which head? IFOS. From that IFOS income which I am deriving from this asset, I will claim the cost of this asset in the form of depreciation from that IFOS income. Understanding? So this asset is given on rent. Will I earn the rent? Will I earn the rent? Is that rent my income? I will show that income under which head? IFOS. So from the IFOS head, from this income of this asset, I will claim the depreciation of the asset under the head IFOS. But it will be claimed by owner only. It will be claimed by owner only. It cannot be claimed by lessee. Who will claim the depreciation? Always the lessor, always the owner. See, why I showed this income under the head IFOS? Asset which I am giving on rent, asset which I am leasing. So the rent of this asset I am showing under the head other sources. Why I am showing this rent under the head other sources? Because I am not in the business of giving the assets on rent. I am not in the leasing business. I had one asset which I am not using. So instead of keeping that asset idle, I thought of giving the asset on rent, giving the asset on lease and earning some lease rent. I am not in the business of leasing the assets and earning the rent. Hence that rent cannot be my PGBP income. Hence that rent is my IFOS. And out of that rent only, which I am showing under the head IFOS, I can claim the depreciation of this asset under the head IFOS. Will you remember? Hello? But what if I am in the leasing business only? Will it be a single asset with me? Or many assets like this I will have? And I am in the business of giving such assets on rent and earning rental income, earning leasing income. So now that leasing income will be my PGBP income. And I will show the income of these assets under PGBP head, and the cost of these assets will be allowed in my hands only in the form of depreciation under the head PGBP. Now these assets are used in my leasing business to earn lease rent. Yes or no? Which is taxable under the head PGBP. Should I give you one more example to understand this thing? Yes or no? Okay, yes. I have one camera at home. Real life example, real life example. I have one camera at home. This is a fact. Sony camera. Sony. You know, na? Sony, Canon, Nikon, all are company. So, Sony cameras are usually costly. So, the camera which I have bought, no, Sony camera, is a professional camera. The cost of that camera is 2 lakh. Few years back, no, when I was very young, at that time, I was very excited, and somehow I developed that interest that I want to get into photography. So I was very much excited that okay, I'll start, traveling solo. I will be going to the jungles. I'll be going mountains, this place, that place. I will, travel solo with my camera, and I will start clicking pictures, nature pictures, then animals, this, that. So I was very excited at that time. Okay, I'm just talking about pre-COVID time, 2018 or 19, something like that. Okay, so in 2018 or 19, that time, one of my friends who is a photographer, okay, I asked him, let's see, boss, I want to do solo traveling and this and that, okay, and I want to capture all the memories for my lifetime. So for that, I want to buy a camera. Suggest me a good camera. So he suggested me a camera, Sony camera. The cost of that camera was 2 lakhs. Morning, we both had a talk. By evening, I bought that camera also. I was so excited. But you won't believe, after I bought that camera, no, I had clicked only 11 pictures in that camera. Only 11. Still, I have not used that camera. Only 11 pictures I have clicked. And that too also, when you get the new camera, no, you try different pictures. So just testing pictures I had clicked on that camera. Immediately after buying that camera, no, I got good opportunities in teaching, and I became very busy in teaching. I was not getting time only to go out, solo travel, this, that. Okay. So that camera which I purchased, no, was lying as it is in my cupboard. Unused, untouched. First day when I bought, that day I, used that camera for a while. I clicked 1 or 2 pictures of my temple at my home, because camera, new thing, auspicious thing. First click the pictures of God. Okay, no. First picture of God, then living God, my Amma Appa. I clicked their picture. Then I clicked one of my picture. Okay. 10 to 11 pictures I clicked, and then from that day onwards, the camera was lying in my cupboard. I did not take out that camera for a single day for the next 1 year. 2 lakh rupees invested in the camera. 2 lakh is my cost. 2 lakh is my cost which I have incurred on that camera. Now that camera is idle, not used at all. After a year, that friend, my photographer friend, you remember, no? Who gave me suggestion to buy this camera? He is in the profession of photography. So his business, his profession is photography. So he takes, orders for pre-wedding shoot, wedding shoot, this, that. So in his business, in his profession, the cameras are used. But one of his camera was not working, and he was having some pre-wedding shoot, photo shoot orders and all. And he was not having money also at that time to replace the lens, because the lens of his camera got damaged due to some reasons. So he had to replace the lens of his camera, and usually the lens of these type of professional cameras are very costly. See, the entire cost in the camera is of that lens only. So the lens was very costly, and he was not having that much money to replace the lens at that time. So immediately he remembered me that okay, Umang is having that professional camera which I can use in my profession, because I'm having few orders right now and I have to have a camera to shoot pictures and all. Okay. So he immediately gave me a call that night and he asked me, Umang, you have that camera which we bought 1 year back. Okay, no? So can I borrow your camera for few days, few months? I said, why? So he narrated this story to me that my camera lens is not working, I have these many orders, this and that, I don't have money to replace the lens and all. I said, okay, no problem. Do one thing, take my camera. Anyways, bloody, I'm not using that camera. Since the time I have bought it with you, it is lying in my cupboard only. Okay. So if you can use it in your business, your profession, you can take that camera from me. But since you are my friend, no, I would have asked more rent, but since you are my friend, you just pay me 5,000 rupees monthly rent. How much rent? So did I give my camera to my friend? Yes or no? My business is to give the cameras on rent, no? I'm in the business of giving the cameras on rent, no? But still I have given the camera on rent, plant and machinery on rent. Whatever rent will come to me, is it my income? 5,000 per month into 12 months. 60,000 rent I have already earned from him in 1 year. Hello? That is my income. Under the head, IFOs. This rental income I cannot show as my PGBP income because I am not in the business of giving the cameras on rent and earning that rental income. Yes or no? So this rental income I will have to show under the head IFOs. And from that income, I will claim the deduction for depreciation on that 2 lakhs, which I had spent on the camera. So how much was the cost of the camera? 2 lakh. That I can claim under the head IFOs in the form of depreciation from that 60,000 income. Yes or no? Did you understand? Now, I am changing my example a little bit. I have opened a shop. Outside my shop, there is a banner, there is a hoarding. Umang Electronics. And in my shop, I am keeping different varieties of cameras and camera lenses. Cameras repaired, sold, given on rent. This is my business. Now social media influencers, the people who make the reels and all, then big production houses who are making movies and all. Yes or no? They require cameras or not? So my business is to give cameras on rent, lenses on rent to these kind of people. Whoever wants camera on rent can come to me. I have so many cameras. Any camera you can take on rent. Whoever wants to take the lenses on rent, you can come to me, take the lenses on rent. I can also repair the cameras also. So my business is to repair the cameras, sell the cameras and give the cameras on rent. Now whatever rent I will receive by giving these cameras on rent, giving this plant and machinery on rent, can I say this rent which I will be having will be my PGBP income now? And out of this PGBP income, I will claim the deduction for what? Depreciation of the cost of these cameras under the head PGBP. Because now these items are used in my business or profession. What is my business? Giving the cameras on rent. Leasing business. Yes or no? So, always remember the person who has incurred the cost, meaning the owner of the asset. The person who has incurred the cost, meaning the owner of that asset, will always claim the depreciation. So in the case of lease transaction, who is the owner, lessor or lessee? So even if that lessor is using that asset in his leasing business or not in the business of leasing, who has incurred the cost? Lessor. That lessor will always claim the depreciation. Whether he can claim it under the head PGBP, if leasing was his business, then income of leasing he will show under the head PGBP. From that leasing business income, he will claim the depreciation. And even if he is not in the business of leasing the asset is not his business, still he will only claim the depreciation under the head IFOS. Always the owner, meaning the lessor, will claim the depreciation. Even if lessor is not using that asset in his own business or profession, but ultimately the cost of that asset has been incurred by the lessor. So who has to claim the cost? Owner, meaning the lessor. Understanding? So the asset was given on lease and the lessee, who is not the owner, is using the asset in his business. Even if he is using the asset in his business or profession, since he is not the owner of the asset, he cannot claim the depreciation. Who is the owner of the asset? Lessor. Even if he is not using that asset for his leasing business, yes or no, then also the depreciation he will only claim. But now he will claim the depreciation under the head IFOS, because after leasing this asset, whatever rental income, whatever lease rent the lessor will be getting, that lease rent he is going to show under the head IFOS. From that lease rent only he is going to claim this cost in the form of depreciation. Understanding? So first condition is specified assets. First condition is specified assets. Second condition? Condition. Assessee should be the owner. Which type of owner? Legal owner. But sometimes he can be beneficial owner also, and he can be allowed the depreciation. But remember, always the owner will claim the depreciation. Even in the lease transaction, the lessor, who is the owner of the asset, will claim the depreciation even if leasing was not his business or profession. Understanding? Even if leased asset is used by the lessee in his business or profession, still the lessee cannot claim. Always the lessor will claim. Yes or no? Now see, any asset which is acquired on hire purchase. Do you remember hire purchase transactions? What happens in the hire purchase transaction? You buy an asset becomes yours. But legal ownership transferred in the end when you pay the last installment. Do you remember that? You buy an asset right now on hire purchase. First you will have to do some down payment. And the balance cost you will pay in small installments to the vendor. So the person from whom you are buying the asset is giving you some credit period. That okay, the cost of the asset is 1 lakh rupees, pay 10,000 rupees right now, balance 90,000 in small installments. So what entry you are going to pass? Tell me, what entry you are going to pass? Asset account? Debit. Do you know accounting entries? So tell me the accounting entry. In the case of hire purchase, you have bought one asset on hire purchase, what entry you are going to pass in your books? Asset account debit to cash bank, down payment, 10,000 you have paid. So cash bank going, how much? 10,000 to 90,000 hire purchase loan account. Asset account debit 1 lakh to cash bank 1 lakh to hire purchase loan. How much? 90,000, which you are going to pay in small installments over the number of years. Have you capitalized the asset in your books? Yes. Asset account debit, meaning you are taking the asset in your books. Now you are going to show this asset in your balance sheet. How much? 1 lakh rupees. This entire 1 lakh cost you are meeting. 10,000 right now down payment and balance 90,000 in the form of hire purchase loan. You are going to repay later on, but entire 1 lakh you are meeting only, no? But are you the legal owner of this asset right now? When are you going to become the legal owner? When you will pay the last installment under the hire purchase, that time you will become the legal owner. So till that time you should not get any depreciation, no? Or you should get. Here the Mysore Mineral case law will apply. Even though you are not the legal owner of this asset, you are the beneficial owner of that asset and you will only get the depreciation. Because entire 1 lakh cost you are meeting, that 1 lakh should be allowed to you in the form of depreciation right away. Understanding? You are not supposed to wait till the time you are not paying the last installment, till the time you are not becoming the legal owner. That might take bloody time, 3, 4 years, 5 years time might go to become the legal owner. Till that time, shouldn't that cost be allowed to you? That cost should be allowed to you only by considering you as a beneficial owner. Understanding? So, assessee is a person who is buying an asset on hire purchase, and that asset, even if the assessee is not the legal owner of that asset right now, he will be considered as the beneficial owner, and the depreciation on that asset will also be allowed to the assessee, which he has bought on hire purchase basis. Will you remember this? So now third condition, specified asset. Specified asset, you should be the owner of that asset. Yes or no? And that asset must be used in your actual use should happen. Actual use means active use. Which use? What is the meaning of active use? Right now I am taking the lectures. These assets are actively used in the business. Projectors are being used, AC is being used, camera is being used, this computer is being used, this sound system is also being used. Hello? Each and every item of asset are in active use. They are actually used in the business right now. Active use means actual use. Yes or no? Sir, but if I switch off, if you are tight slap. Don't talk all such bullshit, huh? Switch off means till the time the operations are going on, they are in use. And when you stop operations for a while, they are not used. The moment again you will do the operations, again they are being used. That means they are in actual use. They are in active use. So all the assets of which you are the owner, all the specified assets of which you are the owner must be in the active use in your business, must be actually used in your business or profession. Only then the cost of that asset can be allowed in the form of depreciation. Will you remember this? Hello, yes or no? Sure, sir. Now tell me one thing. Even if the asset is in passive use, what is the meaning of passive use? Passive use, even if the asset is in passive use, still the depreciation on that asset can be claimed. It is not necessary that the asset should always be in active. See, it is necessary that the asset should be in active use, but it is also sometimes possible that even if the asset is not in active use, it is passively used, still the depreciation on that asset can be claimed. But what is the meaning of that passive use? Asset is kept ready for its intended use. The moment the need will arise, it can be immediately put to use. There are certain assets which are not regularly required to be used in the business, but they are kept ready that as and when the need will arise, immediately they can be put to use. Best example is fire extinguishers. You might be seeing red color bottle. What is that? Fire extinguisher. Are these fire extinguishers in active use? Every day we put a fire, then every day we extinguish the fire. No, asset should be in active use. Only then the depreciation will be allowed. Hello? Do we do that every day? But see, whenever, God forbid, if that incident happens, fire takes place, immediately the fire extinguisher can be taken and used. It is not in actual use, it is not actively in use, but it is in passive use. The moment the need will arise for its use, it can be put to use immediately. Yes or no? Now tell me, there is a machine in my factory, okay? That machine I have imported from Germany. Very complicated machine, huh? And there is one small component in the machine, small motor is there in that machine. If that motor stops working, no, the entire machine crashes. Entire machine stops working. Very small component, that motor. Entire machine, a small motor stops working, entire machine will stop working. Now, if I don't replace that motor immediately, my production will stop. So, to replace that motor, I cannot use the motor of any other machine because there is a specific type of motor which can be used for this imported machine. Yes or no? So, if the motor gets what? Stops working. Yes or no? I will have to order a new motor. From where, you know? It is not available in India. I will have to order it from the same manufacturer who is in Germany. And if I will order from Germany, within half an hour it will come, no? Or it will take at least 10-15 days. I will place the order, they will send the motor, they will get the order, then I'll make the payment, they will they will pack the motor, they will send it to India, and then after coming to India, I will change this motor. It will take 10-15 days. And for 10-15 days, without this motor, my machine cannot work only. So 10-15 days, production will completely stop. And if this thing happens, my business will incur heavy losses. Production for 15 days will be stopped. Understanding what I am trying to tell you? So what to do here? Come on, tell me. Should I get the motor ordered in advance and keep it with myself? That the moment, and that is a very delicate component. So I have already ordered that motor. See, right now the machine is working and the motor is also working. Yes or no? But I have already ordered an extra motor and kept that motor with me. That is not a general spare part which can be used for any machine. That is a specific component to be used in specific machine. The moment the need will arise, immediately that can be put to use. So that is in passive use. That is in cost of that motor can be claimed in the form of depreciation. Even though not actually installed, but as and when the need will arise, immediately it can be put to use. Yes or no? So what is that use known as? Passive use. What is that use known as? Passive use. Will you remember this? Everyone. So, first condition is, tell me, asset should be a, second condition, assessee should be the, and third condition, that specified asset of which the assessee is the owner, that asset must be used in the business or profession. Use has to be a active use. But sometimes, even if the assets are passively used in the business or profession, on those assets also the depreciation can be claimed. Understanding? Will you remember these three conditions? After satisfying these three conditions only, you are eligible to get the depreciation. Understanding? Now pay attention here. See, now you want to calculate and claim the depreciation, yes or no? So depreciation usually you calculate based on the use. If you use the asset for 8 months, you calculate the depreciation for 8 months. If you use the asset for 6 months and 9 days, you calculate the depreciation for 6 months and 9 days. What if since the beginning of the year you are using the asset and you sold the asset on 15th of August? So till what time you will calculate the depreciation? From 1st April to 15th August. Yes or no? Meaning the period for which the asset is used, only for that period the depreciation is calculated. That you do in accounts. That you do in accounts. Not here. What if you buy one asset? You are buying one asset in this year on 9th of July. So you usually calculate the depreciation from 9th July to 31st March, because that is the period for which the asset is used. So always you calculate depreciation. You have been calculating the depreciation based on the number of days or number of months for which the asset is used. That, please forget that thing in the Income Tax Act. Do that thing while doing accounts. That holds good when you do accounts. But in the Income Tax Act, under the PGBP head, whenever you are going to calculate the depreciation calculation will not happen for number of days used, number of months used. It will be calculated for the full year. Depreciation will always be calculated for full year. We are not going to allow you the depreciation based on the number of days or number of months used. We are going to allow you the depreciation for full year at the applicable rate. So whatever may be the rate, apply that rate and calculate the depreciation for full year, and full year only the depreciation will be allowed. Depreciation will be calculated, will be claimed, will be allowed for the full year at full rate, full applicable rate. But there is one exception. There is one. If you have acquired an asset during a previous year. If you have acquired an asset during a previous year, and in that same previous year, if the asset is put to use for less than 180 days, then for that first previous year, the depreciation will be allowed at half of the applicable rate, but the depreciation will still be allowed for full year. So under the Income Tax Act, there is no concept of calculating depreciation for number of days, number of months. No. Calculation for depreciation will happen for full year. Either that calculation will happen at full rate or that calculation will happen at half rate. But the depreciation will always be calculated for full year. There is no concept of half year depreciation, these many months depreciation, these many days depreciation. No, because there is only one concept under the Income Tax Act, that is depreciation for full year. Full year depreciation we are going to allow. So you are going to calculate depreciation for full year. You are going to claim the depreciation for full year. We are going to allow the depreciation for full year. Calculate, claim and allow for full year. But the depreciation will be calculated at applicable rate, full rate, or it can be calculated at half rate also. But half rate will be applicable only in one exceptional case. What case? If the asset is acquired in any previous year. If the asset is acquired in any previous year. Listen to me very carefully, because I am going to make some cases And in those cases, this discussion will be required. So if the asset is acquired in any previous year, asset is acquired in that same previous year, in that same previous year, if the asset is put to use for a period of less than 180 days, then for that first previous year, the depreciation will be calculated for full year, but at half rate. Depreciation is not to be calculated for days, months. No. Depreciation will always be calculated for full year, but in this case, the depreciation will be calculated at half of the applicable rate. So if the rate was 10%, the rate will become 5. But the depreciation will be calculated for full year. Yes or no? Hello? So, should I give you a few examples? Okay. Are you going to tell me full year, half year, rate, everything you are going to tell me? Huh? Sure, no? Okay. For example, what is your previous year? Tell me. 25, 26. This is your previous year, no? Now, in this previous year, this is DOP. DOP means date of purchase. Okay. So, asset was purchased and this is put to use. When the asset was put to use. Okay, no? For example, the asset was purchased on 5th May 2025. See, if the question tells you that when the asset was acquired and the question does not tell you that when the asset was actually put to use, you are always supposed to assume that the asset was immediately put to use on the same day. So if the question is silent about the date on which the asset is put to use, you are always supposed to assume as if it was put to use immediately, as on the date of purchase only. But if these dates are different, then the question will always tell you. Okay? Sit down properly like this. Sit down properly. Hey. You guys are young or what? I don't. Put to use. Come on, tell me. Tell me any one date. But not too far, huh? Tell me nearby date only. July. Should I take 6th July? 6th of July 2025. Now, can I say for this previous year, the asset was purchased in this previous year? And in that same previous year, the asset is put to use? On what date? From here to 31st March 2026. It is put to use for how many days? Can I say greater than 180 days? Hello? So on this date, whatever asset was purchased, on that asset, depreciation for full year, 180 days, 90 days, the depreciation will be calculated for full year. The depreciation will be calculated for full year. Calculation of depreciation will never happen for number of days, for number of months. Sir, we do it, but do it in accounts, not here. Here the depreciation will be calculated. This year's depreciation on the asset will be calculated for full year. At what rate? At full rate or half rate? Full rate. How many of you saying half rate? This year the asset is put to use for 180 days or more, bloody. If it is put to use for less than 180 days, only then take half rate. Is it less than 180 days or 180 days or more? Can you bloody calculate the number of days? Calculate. July, how many months, how many days? Out of 31 days of July, first 5 days not used. So in July, how many days used? 26. On your calculator, 26. But do one thing, no. April, how many days? 30. Take 30. May, how many days? 31. June, 30. And July, 5 days. Because from 6th it is being used, no? So how many days are there on your calculator? These many days the asset was not put to use out of 365. So 365 minus these many days. So from here till here, the asset is put to use for 269 days, meaning 180 days or more. So the depreciation on that asset for the first year will be calculated for full year at what rate? At full rate. Did you understand? Did you understand the first example? Now let's go to the second example. What is your previous year, sir? What is your previous year? In the year 25-26, the asset was purchased, date of purchase, and it was put to use. Now the asset was purchased on 19th of June 2025 and it was put to use on 25th of February 2026. Possible? Hello? Possible, no? So from here till 31st March 2026. This year the asset is purchased and this year it is put to use for a period of less than. Can you calculate? From 25, 26, 27, 28. 4 days in February and 31 days of March. How many days? 35 days the asset is put to use. It is put to use for less than 180 days. So for this year, the depreciation will be calculated for depreciation for full year, but at half of the applicable rate. Will you remember this? Will you remember this? Okay, next example. Next example. What is your previous year? What is your previous year? In this previous year, the asset is purchased. It was purchased on 29th of March 2026. And it was put to use. It was put to use in the next year. In the next year. And it was put to use on 7th of October 2026. If you crack this, I will be very happy. Crack this, come on. Should I ask you one question first? How many previous years are there, you know? In the previous year, 25-26, the asset was purchased. But it was put to use in which year? Same year it is not put to use. It was put to use in the next year. So first of all, previous year 25-26 used for 0 days. How many days? Sir, 0 days means less than 180. 0 days means 0 is less than 180, no? So in that year, will you get depreciation? But half slab also you will get. 0 days means no use. It does not mean less than 180 days use. 0 days means no use. No use means no depreciation. I told you, the specified asset of which you are the owner, that asset must be actually used in your business or profession. If you are using, only then you can claim the depreciation. Bloody 0 days use means use or no use. And you are saying, sir, 0 is less than 180, no? So it is used for, how the bloody hell you can even talk about that? If it was used for 1 day and you are saying that, I can actually understand. But if it is not used for a single day, meaning it is not used, you cannot say 0 is less than 180 days. So less than 180 days used. Understanding? So 0 days means no use. And if no use, then no depreciation. So no depreciation for previous year 25-26. No depreciation for previous year. Now in the next year 26-27, could you use the asset in 26-27? Hello? From 7th October 26 to 31st March 2027. How many days? How many days? 176 days, which is less than 180 days. Yes or no? Therefore, in this year, depreciation will be allowed or will not be allowed? Will be allowed. For full year. At what rate? At what rate? At what rate? At what rate? Again I am asking you, at what rate? Even though the asset was used for less than 180 days. Sir, why have you not taken half? Why have you taken full? Can anyone tell me this? The restriction of half rate is applicable only for the first year in which the asset was acquired. And by the way, this is not the year in which the asset was acquired. So here that restriction does not apply only. And if you are calculating this number of days now, then you are a mad person. No need to calculate the number of days in the subsequent years. The number of days calculation you will do only in the first year in which the asset was acquired. Is it the year in which the asset is acquired? Then why are you checking the number of days? And deliberately the examiner has told you that this year the asset is put to use for less than 180 days. And he knew that the moment he will tell you that the asset is put to use for less than 180 days, immediately you will take half rate depreciation. Immediately I will be able to give you the wrong and allocate 0 marks. Half rate restriction is applicable only in the year in which the asset is acquired. If in that same year, in the year of acquisition, if in that same year the asset is put to use for less than 180 days, then only for that first year the rate of depreciation will become half. in every other case, full year depreciation at full rate only. Understanding? Hello? All the cases, depreciation, full year, full rate. Full year, full rate. Full year, full rate. But only one case, the year in which the asset is acquired. In that same year, in the year of acquisition itself, if the asset is put to use for less than 180 days, for that first year, the rate of depreciation can be half. If it was put to use in that same year for a period of less than 180 days. Otherwise, don't half the rate also. Understanding? Understanding? Not understanding? Okay. See, depreciation calculation for proportionate period of use, meaning for number of days used, number of months used. Don't do that because this happens in accounting. We are doing income tax. In the income tax, the calculation, claim and allowance of depreciation is not for number of days, number of months. It is always for full year under the Income Tax Act. But it will be for full year at full rate, or it can be at half rate. But half rate will be only if the asset was acquired and put to use for less than 180 days in that same previous year in which it was acquired. Only then for that first previous year the rate will be half rate. Did I tell you this? Everyone? Now, different examples which I gave you, those examples are there, okay? Now, sir, you have to remember my birthday, huh? From today onwards, you will remember my birthday also. Even after becoming a chartered accountant, you will wish me on my birthday. Because, see, I will give you a shortcut. No need to calculate the number of days. You will immediately come to know less than 180 days or more. What did I tell you? Did I tell you that, see, if in the previous year 25, 26, in this year, the asset was purchased and the asset was put to use in that same previous year. Yes or no? Asset was purchased in which year? 25, 26. Previous year, 25, 26. In that same previous year, it was put to use. Same previous year, it was put to use for less than 180 days. Then depreciation for that same year 25, 26. Depreciation for 25, 26, meaning the first year. That is the year of acquisition. The depreciation will be for full year at half rate. Now you have to see that in this year the asset is put to use for so the counting of these days has to be done. You have to do the counting. How will you count? You will start from the date of purchase, no? You start from the date of purchase, no? Date on which the asset is purchased. From that date you will start counting, or you will start counting from date when the asset is put to use. So from that date you are supposed to start counting. You are supposed to start counting from this date. From this date till 31st March of that previous year. Yes or no? Now actually you will have to count. But if you want to save yourself from that counting, can you remember my birthday? 4th October. I am just 2 days younger to Mr. Gandhi. 4th October. Which October? If you put to use, if you purchase the asset in this year And if you put to use that asset on my birthday, if you put to use that asset on my birthday, what is my birthday? 4th October 2025. If you put to use on this day, if you put to use on, so from this day till 31st March, count. October, how many days are there? 31. First 3 days you remove. So October, how many days? 28. November, 30. December, 31. January, 31. February, 28. March, 31 you are going to get. Ayyo. If you use the asset, if you start using the asset from 4th October, then you will be able to use it for 179 days, meaning less than 180 days. What if you start using from 5th October? 178. What if you start using from 6th October? 177. What if you start using from 7th October? 176. Likewise, one day will come down. So if you put to use on my birthday, if you put to use on my birthday or any day after that, it is always less than 180 days. But what if you put to use on 3rd October? It will become 180. Hello? What if you put to use on 2nd October? It will become 181. What if you put to use on 1st October? It will become 182. Are you getting my point or not? So you have to put the asset to use before my birthday. Only then it will be used for 180 days or more. So if you put to use any day prior to my birthday, then the use is 180 days or more. Full year, full rate. Hello? If you put to use on my birthday or any day after that, used for less than 180 days. Full year, half rate. Will you remember this? So can I say, if asset is put to use prior to acquired in 25, 26 and put to use in 25, 26. Put to use in 25, 26 only. Put to use prior to sir's birthday. Hello? Then use will be equal to or more than 180 days. So in this case, depreciation for full year at full rate for previous year 25, 26. Yes or no? Wait. If the asset is acquired in 25, 26 and in that same year it was put to use on my birthday or after my birthday, on or after 4th October 2025. So you will be using that asset in this year for less than 180 days. And in that case, the depreciation will be for full year at half rate for previous year 25, 26. Will you remember this? Should I move ahead? Perfect. Very good. Excellent. You understood? Okay. Now the real game begins. So far you have just understood what is depreciation and when the depreciation can be allowed. If you satisfy those three conditions. Now you will understand how to calculate that depreciation. How to calculate and claim that depreciation. So calculation you are going to learn now. Okay. So now see, your depreciation, calculation and claim of your depreciation is given under section 32. Read with rule 5. Read with rule. So now there are 32 subsection 1, clause 1, clause 2, clause 2a and clause 3. 4 clauses are there. Clause 1, 2, 2a and 3. Clause 1 talks about normal depreciation. Clause 2 also talks about normal depreciation. Clause 2a talks about additional normal depreciation. We usually call it additional depreciation, but that is not a new type of depreciation. That is a extra normal depreciation which is given. That is why it is known as additional depreciation. That is a normal depreciation which is given extra. So that is additional depreciation. And there is one concept of terminal depreciation. This concept we are going to cover with 32.1.1. Okay. Now we'll learn that how to calculate the depreciation normally. Okay. What is depreciation? Decrease in the value of asset. What is depreciation? Cost of the asset. Capital expenditure, which was not allowed at once. Full amount was not allowed. That amount is allowed in small parts. Is nothing but depreciation. Yes or no? Now pay attention. First depreciation which I am going to tell you. 32 subsection 1 clause 1. 32 subsection 1 clause 1. Now this is a clause which is applicable to an assessee. Sir, assessee can be any person, but that assessee is engaged in any business. Engaged in any business? No. Engaged in power business. Sir, which business? Power business means electricity. Generation, distribution, transmission, etc. of electricity. Power means electricity. So, what is the business of the assessee? Power business. So, in your power business, assessee, in your power business, will you acquire some assets? Will you acquire some assets? So, in your business, some assets are acquired. Now, are you supposed to group these assets? No. Don't group these assets. Whatever assets are acquired, actual cost of individual asset. What did I say? Actual cost of individual asset which was disallowed. For this business, whatever asset is acquired, the actual cost of that asset which was disallowed, that actual cost we are going to allow in the form of depreciation. But on this actual cost, you are supposed to take this actual cost as what? Depreciation, no? But this actual cost we are going to apply at what rate? By what method? If we will tell you, you decide, you will say 100%. So can we tell you to decide the rate? No. Otherwise, what was point of disallowing the cost? If we tell you, you only decide the rate, you only decide the method, no. That is why rules. The rules has some rates which are applicable. So for each asset, a separate rate is prescribed. For each asset, a separate rate is prescribed under Rule 5. Under Rule. So if you will go to Rule 5, there is sub-rule 1A. So in Rule 5, there is sub-rule 1A, and there you will see Appendix 1A. Appendix, no? Appendix. Appendix, no. Appendix means table. Appendix means, that's why I told you, no, English is a funny language. Appendix means appendix also, and appendix means table also. So they are talking about which appendix? Table, table. So there is a table. The table number 1A, appendix 1A. And that appendix 1A, you will see in Rule 5.1a. Which rule, sir? In Rule 5.1a, there is Appendix 1a. In Appendix 1a, the name of different assets are written, which can be used in your power business. Yes or no? And against each asset, a rate is also prescribed. So the rates are prescribed for each asset separately. The rates are prescribed for each asset separately. In Appendix 1a to Rule 5.1a, apply those rates. And after applying those rates, whatever depreciation you calculate, that depreciation you are going to claim on SLM basis. This is the way in which the cost of your asset we are going to allow in the form of depreciation. So, cost of each asset which is used in your business we are going to allow. But that cost will be allowed in the form of depreciation. And to calculate the depreciation on that cost, you are supposed to apply the rates. Rates which are prescribed. Where the rates are prescribed? So on this actual cost, you will apply what? You will apply prescribed rates. Apply prescribed rates. Where the rates are prescribed? Come on, tell me. Rates are prescribed in Appendix 1A. Wait, Appendix 1A to Rule 5.1. Now in this appendix, whatever rates are prescribed, apply that rate. By applying that rate, you will calculate the depreciation. Hello? And that depreciation will be allowed on SLM basis. So how will you calculate? Come on. Assessee, are you in power business? Assessee, are you in power business? In your business, are you acquiring some assets? Actual cost of each asset we will allow separately. Actual cost of each asset we will allow separately in the form of depreciation on SLM basis. Actual cost will be allowed on SLM basis, but at the rates which are prescribed in Rule Appendix 1A to Rule 5.1. So, you are supposed to have what? Actual cost of the asset ready with you. On that actual cost, you are supposed to apply the rates. Rates which are prescribed in Appendix 1A to Rule 5.1a. After applying this rate, you will have depreciation which you are going to claim on what basis? SLM basis. Simple, no? Full rate you will apply. And by applying the full rate, you are going to calculate the depreciation for full year that we are going to allow. But remember, the rate which is prescribed, this rate will become half. This rate will become half for the first year in which you have acquired this asset, and that asset in that same year is put to use on or after sir's birthday, less than 180 days. Yes or no? Will you remember this? Perfect. Done. First type of depreciation is done. Assessee can be any person engaged in power business. He can calculate and claim normal depreciation on the actual cost of each asset, individual asset, at the rates prescribed in Appendix 1A to Rule 51A. On what basis? SLM basis. Now, very important discussion I'm going to do now. I will give you one example, and with that example, terminal depreciation will also be cleared. Okay, now? So let's take one example. Okay. See, assessee is engaged in which business? Assessee is engaged in which business? Power business. So, the assessee who is any person who is engaged in which business? Power business. For this business, he is acquiring one asset. Let's say asset X. So what is the name of the asset? Asset X. So asset X he is acquiring. Now asset X was acquired on 19th of July 2021. 19th July 2021. Is it acquired in this year or it was acquired in 21-22? The asset was acquired in 21-22. Okay. And it was acquired for rupees 100 lakhs. How much? So the cost of 100 lakh is nothing but actual cost of that asset. Okay. Now, in the power business, if this asset was acquired, so the rate of depreciation prescribed for this asset, rate of depreciation prescribed in Appendix 1A for this asset was 10%. Let's keep a simple rate, 10%. Yes or no? Sir, are you supposed to remember the names of the asset and the rates of the depreciation? The answer is no. The name of the asset, rate of depreciation, they will directly give in the question. Don't worry about that. Okay, no? So, no need to remember the name of each asset and the rate prescribed for each asset. No need to remember that. If they are going to give you any asset on which SLM basis depreciation has to be calculated, they will tell you the name also of the asset and they will give you the rate also. Don't worry about that. So, for example, the name of the asset is asset X. And what is the rate which is prescribed on this asset? The rate as per Appendix 1A was 10%. And what is the actual cost of this asset? 100 lakhs. Now, on this actual cost you are applying, you have to apply 10%. You have to apply this 10%. Yes or no? And by applying this 10% rate, whatever depreciation will be coming, that depreciation you are going to claim on what basis? SLM basis. Sure. Since when you will start claiming the depreciation? Since the year in which the asset was acquired. So which is the year in which the asset was acquired? So can I say in the previous year 21, 22, the depreciation will be calculated on 100 lakhs for the full year at what rate? 10%, and this 10% will remain full. Why? Because the year in which the asset was acquired, in that year, if nothing is mentioned, I will assume that same day the asset was put to use also. So from 19th July to 31st March, the asset will be put to use for more than 180 days. So the first year in which the asset was acquired, in that year the asset was put to use for 180 days or more. So in that year, full year depreciation at full rate. Yes or no? So 100 lakh into 10% full rate depreciation on the actual cost for the full year. Hello sir. So what will be the depreciation for this year? 10 lakhs. So out of 100 lakhs, 10 lakhs will be allowed in 21-22. How much WDV will remain now? How much WDV will remain now? 90 lakhs WDV will remain. Yes or no? Now in previous year 22-23, in the previous year 22-23, if you take 90 lakh and you apply 10% on that, you are gone. Why? Because the depreciation is not to be allowed on reducing balance method. It is to be allowed on SLM. SLM, again the same depreciation will come on 100 lakh. What? 10%? 10 lakh. What will be the WDV? 80 lakhs now. See, in the first year no, if the asset was put to use for less than 180 days, then for the first year the rate would have been half, only 5%. Then first year depreciation would have been 5 lakh. But subsequent year the rate will be full. So subsequent every year the rate will be 10% and the depreciation will be 10%. Are you understanding what I am trying to tell you? But in the first year it would have been 5%, only 5 lakh. But in my example, I have deliberately not taken this. I have taken that in the first year, the asset is put to use for 180 days or more. So in the first year also, the rate is full. So full 10 lakh depreciation will be allowed on in first year also. Yes or no? Now tell me, 22-23 done. What about 23-24? What about previous year? 24-25. Same only, no sir? Hello sir? Same only, no sir? Duplicate only. Now, what will be the WDV here? What will be the WDV here? Now pay attention. Now, your previous year is coming. On that asset, till last year, you have already claimed depreciation. Meaning, out of 100 lakh cost, what did I say? Out of 100 lakh cost of that asset, 40 lakh cost is already allowed in the last 4 years in the form of depreciation. 60 lakh cost is still remaining to be allowed in subsequent years. Yes or no? Hello? So can you claim something out of this 60 lakhs in 25-26? Something will remain and that you will claim in the subsequent years. So if you want to claim the depreciation in 25-26, what is the requirement? That asset must be used in the business in 25-26 also. Hello? So now tell me, in the previous year 25-26, what did I say? Previous year 25-26, I would have definitely claimed the depreciation for this year also. But this year, there will be no depreciation since the above asset, is sold during previous year 25-26. Now let us take one date. Okay. Tell me whatever date on which the asset is sold. Any one of you. Bhagyashri, say which date? 10/7/25. 25-26. This year date you are supposed to tell me. 10th July 25. Bhagyashri is saying that the asset is sold in this year. On what date? 10th July. Understanding? Can I say in this year asset was used, but not for whole year. It was used only up to 10 July. So let's calculate and claim the depreciation till 10 July. Why not? Depreciation always for full year. And bloody full year depreciation cannot be calculated from 1st of April till 10th of July. Because the asset was there till 10th of July. So if the asset is sold in this year, it can be sold at any time. It can be sold in the beginning of the year. It can be sold in the mid of the year. It can be sold in the end of the year. You cannot claim a single rupee of depreciation in this year. Why? Because the depreciation calculation will happen for full year. And if you want to calculate and claim the depreciation for full year, the asset must be there in your business as on the last day of this year. Do you have this asset as on 31st March 2026 in your business? So, how do we calculate the depreciation for full year and how do we allow that depreciation? To allow you the full year depreciation, the asset should be there in your business as on 31st March. And as on 31st March, your business is not there because you have sold that asset on 31st March or any time prior to that. Even if you will sell this asset on 31st March also, no, still you will not get any depreciation. Even if you sell it on 31st March, asset should be there on 31st March. Till 31st March. Yes or no? Only then you can claim the depreciation. Now whenever you will sell the asset, not during the previous year, even if you sell the asset on 31st March also, the asset does not remain on 31st March because you have sold on 31st March. If you sell the asset on 15th of August, not there on 31st March. If you have sold the asset on 18th of November, not there on 31st March, no depreciation. Whenever you sell the asset will not be there on 31st March. On that asset, no depreciation can be allowed because depreciation we are going to allow for the full year. And if you want to claim the depreciation for full year, the depreciation will be allowed only if the asset is there in your business as on 31st March. So sir, please allow the depreciation for the number of days, months. No, that type of calculation is not allowed under Income Tax Act. Either claim the full year depreciation or don't claim at all. Every year we are going to allow you the depreciation for full year, provided the asset is there on your business, in your business as on the last day of that previous year. Every year we allowed the depreciation because the asset was there in the business as on the last day of each year. But as on the last day of this year, the asset is not there in the business, we are not going to allow you the depreciation. Hence, no depreciation for this year. Did you understand this much? Sure, no? No depreciation for this year. Why? Since the above asset is sold during the previous year 25-26, which means that asset is not in the business as on 31st March 26, hence depreciation which is to be calculated for full year cannot be calculated. Done, sir? Now pay attention. In 25-26, depreciation will not come. Logic you understood. Okay, no? But in this year, don't you think the asset is sold? And if the asset is sold, then the income will also arise. What will you do with that income? Now I will take 4 examples. By selling the asset, you are getting how much? A, B, C and D. Okay. What was the WDV of this asset? Closing WDV of the last year will become opening WDV of this year. Closing WDV of the last year will become opening WDV of this year. So we'll take 4 examples. One example, I will say that the selling price received was less than that WDV. Let's say the selling price was only 42 lakhs. Possible or not? Less than WDV. Second example, I will say that you are receiving exactly same amount as that of your WDV. Third example, more than WDV, meaning 73 lakhs. Example, And fourth example, more than WDV as well as more than actual cost. What was the actual cost? So can you sell the asset for more than 100 lakhs also? Yes. Yes, why not? My asset, whose WDV right now is 60 lakhs, I know, na? If I want to sell this asset to someone for 105 lakhs and someone is ready to give me 105 lakhs for that, what problem do you have? So I cannot sell it for more than 100 lakhs. If somebody is ready to give me more than 100 lakhs, I will tell, no, my cost was only 100. So how can I sell for 105 lakhs? But what bullshit. Apply some mind before speaking. Can I sell the asset for more than my cost also? So let's say I am selling it for 105 lakhs. Possible or not? All the 4 possibilities I have told you. Now in this year, depreciation will not be allowed. Why? Because this year the asset is sold. At any time you sell the asset, the depreciation will not be allowed. Yes or no? Because the asset is not in existence in your business as on the last day of the previous year. Hence in this year, full year depreciation will not be available. And for part of the year, we don't calculate and we don't allow you to claim and we don't allow you also. Either claim for full year, and if you want to claim it for full year, the asset should be there in your business at the end of the year, which is not there, hence no depreciation. But in this year, if you are selling the asset, by selling the asset, will you receive the money? Will you receive the money? How much you are receiving? How much you are receiving? Point number A. Point number A. Sir, I am receiving 42 lakhs, sir. How much? 42 lakhs, meaning the selling price which I am recovering for this asset is less than its WDV and also less than its actual cost. Bloody, if it is less than WDV, it has to be less than actual cost, no? Because WDV itself is less than actual cost and you are receiving less than WDV. So selling price is less than WDV, so it has to be less than actual cost. What is selling price? 42. What is your WDV? 60. What was your actual cost? Now, what will happen in this case? Come on, tell me. Stand up. Yes, you. Stand up. Explain. Explain. No, I don't want to listen to that. Just tell me what tax effect should I give here. No tax. Sit down. Don't talk now. Tell me one thing. If you have closely seen the example, how much money I spent from my pocket to get the asset. Become an assessee, apply some logic. 100 lakh went from your pocket to buy the asset. Out of that 100 lakhs, 10 lakhs was allowed for 4 years. So out of this 100 lakhs, 40 lakhs cost we have already allowed in the form of depreciation. Now how much cost is still remaining to be allowed? This we would have allowed. But don't you think out of this 60, you have already recovered 42? So forget about that 42. But sir, 18 lakh is yet to recover, no? Which could not be claimed in the form of depreciation because the asset is no more in existence. So don't worry, that balance 18 lakhs will allow for the last time in this year as your terminal depreciation. So out of 100 lakhs, 40 lakh cost we already allowed. How much cost was remaining to be allowed? 60. But out of that 60, 42 lakhs you have recovered, no? So forget about that 42. How much cost is still remaining? That entire 18 lakh which is remaining, claim it for the full and final last time in this year as your terminal depreciation. Simple. First case done. So in the first case, what will happen? If the selling price is less than WDV, then the difference between the WDV and the selling price, which was how much? 18 lakhs. Difference between 60 lakhs and 42 lakhs. 18 lakhs will be treated as your terminal depreciation under section 32 subsection 1 clause 3, and this will be allowed in which year? In the year in which you have transferred the asset. This is the last year, and in this year full and final this much depreciation you claim from us. The cost which you could not recover by selling the asset, this will be the full and final amount which we are going to allow you in the form of depreciation. Will you remember this? Sure. First case done. Second case, how much you are recovering? How much you are recovering? So 60 lakhs selling price is equal to WDV, but still it is less than actual cost, because WDV bloody is less than actual cost only. So if selling price is equal to WDV, it has to be less than actual cost. So how much was selling price? 60. How much was WDV? 60. How much was actual cost? 100. Sir, apply some mind. Apply some mind, sir. Sir, the cost of the asset was 100. Out of that 100, 40 lakh was already allowed in the form of depreciation. How much cost is still allowable? Bloody that entire 60 you have recovered, no? Now what tax effect should we give? No tax effect. Nothing doing. The 60 which was allowable, the entire 60 you have recovered. Now that 60 is not going to be allowed in the form of depreciation. And that 60 you have recovered. Ultimately, the cost of the asset was only 40. Out of 100, if you are recovering 60, the cost of asset was only 40, which we have already allowed in the form of depreciation. No tax effect is to be given. Neither right now nor later on. No tax effect has to be given in this case. Yes or no? So here what are you going to do? Come on, tell me. No tax effect. In previous year, 25, 26. Forget about everything. Okay. Now, third case. Third case. Selling price this time is higher than, but it is not that high that it should cross actual cost. It is still less than actual cost. What is my third example? 73 lakhs. Sir, 73 lakh selling price is higher than WDV of 60 lakh, but it is still less than 100 lakhs. Now here what is happening? Apply some logic. What was the cost? Out of that cost, how much cost you claim from us in the form of depreciation? So 40 lakh cost. Out of 100, 40 lakh cost we have already allowed in the form of depreciation under the head PGBP. Now, how much cost is still remaining? That entire 60 you have recovered by selling the asset for 73. And on top of that, 13 lakh extra cost you have recovered. And that 13 lakh extra which you have recovered, no, we will assume that you have recovered this 13 lakh out of the depreciation which we have already allowed under the head PGBP. So the depreciation which we have allowed under the head PGBP, from that depreciation only you have already recovered this 13. This 13 will now be treated as your deemed PGBP income, because this 13 is out of the depreciation which we have allowed. What was the cost of the asset? Out of that, how much cost we allowed? How much cost we allowed? 40. How much cost is still allowable? Bloody that entire 60 you have recovered, no? By selling the asset for 73. Forget about that 60. Extra 13 lakh also you are recovering. That 13 lakh you have claimed from us in the form of depreciation in that 40 lakh. Reverse that. Show it as your deemed PGBP income. This amount will be known as balancing charge. What you will call it? Balancing charge. Because we are going to assume that whatever recovery over and above WDV you are doing, that recovery is out of the depreciation which we have allowed under the PGBP head. So the amount which we allowed under PGBP head as a depreciation, that amount only you are recovering. So consider this amount as your PGBP income now. This will be deemed to be your PGBP income as per section 41(2). One more way to interpret this. How much was the cost of the asset? How much was the cost of the asset? And you are selling the asset for? So balance how much? 30. Cost of the asset was 100. You are selling the asset for 73 lakh. How much is the balance? So only 27 lakh should have been allowed in the form of depreciation. How much you have claimed? How much extra depreciation claim? Reverse that. Balancing charge. Common sense, which is very uncommon. Okay. So uncommon common sense you will apply. What are you going to do? You are supposed to take selling price and you are supposed to reduce WDV. Any selling price over and above WDV, meaning that 73 lakh minus 60 lakhs, 13 lakhs. This is out of the depreciation which we have allowed. Yes or no? So how much depreciation we allowed? Actual cost minus WDV. Actual cost was 100 lakh. WDV was 60 lakhs. So how much depreciation we have already allowed? 40 lakh. So out of this 40 only this 13 lakh is recovered. Yes or no? So either A or B. Either, oh sorry, this is 1 and 2. I'll write 1 and 2 because A, B, C I have already written above, no? You will get confused. Okay. So either 1 or 2, whichever is lower, of 1 and 2, which is how much? 13 lakh. And by the way, this 13 lakh, what we will call this? We'll call this balancing charge. And this will be taxable. This will be treated as your deemed PGBP income under section 41(2), and it will be taxable in which previous year? It will be treated as your deemed PGBP income for which previous year? Previous year 25, 26. So in the previous year 25-26, we are going to reverse this much depreciation, because we consider that 13 lakh which you are receiving extra is out of that depreciation which we have already allowed for this asset. This amount should not have been allowed in the form of depreciation, because this extra recovery you are doing. So we are going to assume as if this extra recovery is happening from that cost which we have already allowed in the form of depreciation. From that only this extra recovery of 13 lakhs is happening. Hence we are going to consider this amount as your deemed PGBP income. Will you remember this? Hello sir. Next one. What is the last case? 105 lakhs. Ayyo, 105 lakhs. Color. Purple color. Okay. D. What is D case? Selling price is this time higher than WDV and also higher than actual cost, because your selling price was 105 lakhs, WDV was 60 lakhs, actual cost was 100 lakhs. Yes or no? Apply same logic. What was the cost of your asset? 100. Out of that, how much cost already claimed? How much cost already claimed? 40 lakhs. How much is still claimable? You have recovered that entire 60 by selling the asset for 105. Have you recovered entire 60? So if you sell the asset for 105, entire 60 you have recovered, but on top of that 60, you are recovering 45 extra. And that 45 includes the full depreciation which we have already allowed. How much depreciation which we have allowed? That full 40 also you have recovered, no? So that 40 will be your deemed PGBP income, balancing charge. And what about the extra 5 lakhs? That will be treated as your capital gain. Anything over and above the cost of that asset cannot come under PGBP, that will go in capital gain. Up to cost, whatever recovery will happen will be adjusted under PGBP. Understanding? In the form of balancing charge. Either the full amount of depreciation is recovered or some part of the depreciation is recovered. Only to that extent the balancing charge will be created. The balancing charge cannot be 45 lakhs. Why? Because we never allowed 45 lakhs as a depreciation. Under the PGBP Act, how much cost we allowed? 40 only we have allowed in the form of depreciation. Only that 40 will be treated as your balancing charge. But sir, I am recovering 45, meaning 5 lakh extra. That cannot be taxed under PGBP, because that was never allowed under PGBP. And that is a recovery over and above the actual cost, has to go to capital gains. Has to go to capital gains. So how will you present this? Same thing. Number one, what are you going to do? Any selling price over and above WDV. What was your selling price, guys? 105 lakhs. And what was our WDV? So selling price over and above WDV is 45 lakhs. Hello? Which means that the recovery is made from the depreciation also. But don't you think depreciation itself was lower than this? Meaning that entire depreciation is recovered. And amount in excess of that 40 cannot be treated as balancing charge. And that is the reason why I am doing this amount of depreciation. Whichever is lower, that will be treated as balancing charge. Getting my point? So how much is the depreciation which we already allowed? Actual cost minus WDV. This was the depreciation which we allowed, no? 100 lakh minus 60 lakhs, 40 lakhs. So any recovery to the extent, any recovery over and above selling price, any recovery over and above the WDV, to the extent of depreciation, will be treated as your balancing charge. So 45 or 40? 45 or 40? Whichever is lower. Lower of 1 and 2, which is 40 lakh. Now this 40 lakh will be treated as what? This will be treated as balancing charge. Copy, paste. Now this will be treated as your balancing charge. Color, purple color. Now, along with this, I will write and. I will write and. Any recovery over and above the actual cost. Because to the extent of actual cost, the effects are given under the head PGBP. But now the selling price is over and above the actual cost also, no? So how much was the selling price? 105. And how much was the actual cost? 100 lakhs. So this is the recovery over and above actual cost. This will be treated as your capital gains for the previous year 25-26, the year in which the asset is sold. Will you remember this? Easy, difficult? Easy, difficult? Made easy. Say thank you. Okay. Pay attention. This entire thing, no, which is there, I have already explained this. This thing I have already explained. Okay. Now, one thing did you notice in this example? You are able to calculate what? You are able to calculate terminal depreciation. You are able to calculate balancing charge. Yes or no? This you can do only if the asset is sold in any year after the year of its acquisition. Asset is sold in any year after the year of its acquisition after claiming depreciation under section 32(1)(1). So the asset is acquired in a year, and after claiming depreciation under 32(1)(1) for certain number of years, later on if the asset is sold, then balancing charge or terminal depreciation could arise. But what if the asset is sold in the same previous year in which it was acquired without claiming the depreciation even for a single year? No terminal depreciation, no balancing charge. Directly you are going to calculate capital gains. What did I say? I said that asset is sold in the previous year different from the previous year in which it was acquired after claiming what? Depreciation under section 32(1)(1). Only in this case, terminal depreciation or balancing charge could arise, because the asset is sold in the previous year 25-26, which is different from the previous year in which it was acquired. It was acquired in 21-22. So asset was acquired in 21-22. In that same year it was transferred. No. 21-22 it was acquired after claiming depreciation under 32(1)(1) for certain number of years. It was sold in some other year later on. Then terminal depreciation and balancing charge will be calculated. But the asset is sold in the same previous year in which it was acquired without claiming depreciation under section 32(1)(1) for a single year, then directly calculate what? Capital gains, no terminal depreciation, no balancing charge will come. Understanding? Sure. 32 subsection 1 clause 1 done. And along with that, I already told you 32(1)(3) terminal depreciation also covered. I've also covered one part of deemed PGBP income here only. Now when I'll be teaching you deemed PGBP income, that time I am not going to teach you this balancing charge, because I have already taught you here only. That time I will tell you, do you remember depreciation on SLM basis, asset purchased for 100, 10, 10, 10, 10 allowed as depreciation, that asset is sold for a value higher than WDV, excess amount over and above WDV to the extent of depreciation will be treated as balancing charge. We have already done that. That time I am not going to explain. That time I will say YKT. You know this, because I have already discussed. Okay? Hello, sir. So now, next depreciation. Next depreciation for guys, assessees. Other than, no, all assessees. Even the power business, even the assessees engaged in power business can claim that depreciation also. The depreciation on block basis, on depreciation on the block of asset on WDV basis. Now single asset will not be there. Grouping of asset will be done. That group is nothing but block. Value of the block, on that value the rate will be applied, and that rate, apply that rate and you will calculate depreciation. Now the depreciation is not calculated for single asset. Now the depreciation is calculated for group of asset, block of asset, yes or no? And that depreciation we are going to allow on WDV basis. And that depreciation has to be claimed by every assessee doing any business, any profession. How to calculate that? That we are going to learn after the break. Take a break, 1 hour.